I'm back. If you're new here, I am Lisa J. Stocks, and today we're going to be taking a look at some AI infrastructure investments so that we can always be informed, never caught off guard, have an understanding of what's going on with our portfolios. Starting off with the viral ETF, the Roundhill memory ETF, very concentrated with just a few holdings. So it's going to be impacted by moves like Samsung's recent earnings announcement has just 21 holdings, and it's only been around since April 2nd of 2026. It's down nearly 16% in the last 5 days and 6.44% on the day. But in the short time that this ETF has been in existence, it's up 118%. So what we're seeing right now is a correction when it comes to this sector, and it's being triggered by one of the world's biggest memory companies, Samsung. I've seen this over and over again, a company reporting record-breaking profits, and still we see a plunge. With headlines like this, why Samsung's solid earnings are dragging down the U.S. chip sector, and Samsung posts 1,800% jump in profits, but AI spending concerns spook investors. So when it comes to Samsung, their earnings were basically a masterpiece. $58.4 billion in operating profit. Their revenue has soared to $171 trillion, up from $133.9 trillion. These are some of the largest quarter profits ever recorded by any tech company. But the shares have dropped by nearly 7% because it's all about expectations. The market expected $173.9 trillion. And this is one of those cases where perfection was already priced in. So just like I've seen in the past with NVIDIA, it's just not enough to be nearly perfect when it comes to reporting earnings. Samsung is a South Korean company with a market cap of $1.2 trillion. This drop when it comes to this sector has wiped out $180 billion across many different companies. On the day, Micron is down about 4.7%, Intel's down 9.66%, SanDisk is down 7.26%, and Western Digital is also down 7.86%. Companies like SK Hynix have also dropped, and that's a Korean company. But these are some of the top names in the Roundhill ETF, DRAM, Samsung, Micron, SK Hynix, Western Digital. So we're suddenly seeing a bit of weakness when it comes to the memory stock. Some other factors impacting the memory are Meta selling off excess data center capacity, a signal that AI infrastructure demand may overestimate that they've been expanding too quickly. Another issue is Apple planning to source their memory chips from Chinese suppliers, which could help them to push their prices down, impacting the profit margins for companies like Micron and Western Digital. And there are lawsuits popping up alleging collusion among 3 of the largest RAM manufacturers. So this headline here says that they are colluding to drive up prices, naming Samsung, SK Hynix, and Micron Technology. So there's so many different factors: earnings drama, lawsuits, the moves of big mega cap companies like Microsoft and Apple. All these different factors can potentially slow things down a bit or cause companies like Apple to find other sources for what they need right now. So many different factors. So we have to be ready for the volatility when it comes to our portfolios, whether we're invested into something like DRAM, SMH, or even SPMO. A company like Micron has huge weighting in those funds. It's up 168% over the last year. It's a $1 trillion company. So definitely understanding what's going on with companies like this will keep us in tune with what's going on with our portfolio when it comes to our ETFs. Micron is down nearly 18% over the last 5 days, and about 5% on the day. So whether it's memory chip conductor or just those fastest moving companies right now, the AI story is not over. We see that what these companies provide is essential. And so I'm staying disciplined, building into my ETFs, sticking to my strategy, knowing that I want exposure to these big names like Micron, NVIDIA, AMD, Google, Broadcom. A nearly 16% drop in just a few days shows us that the memory cycle can be volatile. And depending on when you got started, investing into a fund. You could be in the red. You could be waiting for a recovery right now, but that's a part of investing. So do your research and make sure you're incorporating what you truly believe. Have an understanding of the news and how your investment is going to be impacted, especially when you are dealing with a concentrated fund like DRAM that has an expense ratio of 0.65%. So you're paying for the higher reward potential. So I encourage you to be patient because there will be times like this. Earnings, market shifts, the type of headlines that we've looked at today are going to impact the stock market. When it comes to the funds that we took a look at today, I hold SMH and SPMO in my portfolio. On the day, I'm down about 4% when it comes to my SMH, with a gain of just 7%. It's a newer position to my portfolio that I just added in this year. So one of the ones that I'm not very deep in profit yet. And when it comes to SPMO, I'm down 2.3% on the day with a total gain of about 25%. And I started investing around Q3 of 2025. But I am a buy and hold investor. I believe in the tech companies as well as funds that I've incorporated into my portfolio. They are the backbone of everything that's going on right now. So I'm ready for the volatility and I'm staying informed. So I know what's going on, what is impacting my portfolio, so that I know these are truly investments that I hold long term. And if something significantly shifts, I'll have to evaluate that and know that it's time for it to be cut from my portfolio. But I'm in a place now that rarely happens, but I'm ready for it. So leave me some comments. Let me know how you're doing as you hold through the volatility. Have you done any research on any of your positions, whether it's a stock or a fund, and decided that it's not the right fit for your portfolio? We're in this together, but finance is personal. We all have a different age, risk tolerance, goals, but I want us to all have the confidence to invest and not let this opportunity pass us by. Like, subscribe, hype this video, turn on that notification bell. Thanks for watching. Okay, bye.